I'm not sure I can go, in fact, I'm quite sure I can't go to an MBA class of 50 and sit down and talk with each one, examine their grades, examine their extracurricular activities, and whatever, talk to their parents. I'm not sure I could rank those 50 very well in terms of their potential for future business success. And of course, some of it would depend on what areas they entered into in business. So I think it's tough. I think it's tough to go out to the practice tee where people are not actually hitting balls but just taking practice swings and say which one is a 2 handicap and which one's a 15 handicap and which ones can make it on the tour. I think I can tell a little bit maybe, but it's very hard to calibrate. And I don't think we've had much success, but we also haven't tried very much to identify people before they've had a record, to try and identify the ones that are superstars. Instead, we've taken the easy way, and we go and somebody comes to us with a business that's done phenomenally for 10 or 15 or 20 years, or maybe for 50 years, and we've seen what their batting average is. We've actually seen they bat at 350 or whatever it may be in the major leagues, and we just make the assumption that we won't screw it up by hiring them. And we also make the assumption that they'll live to be 100 or 120 or something, and we buy the business. And that's far easier. It is far easier to tell the great baseball batters after you've seen a couple seasons of their batting than it is to go to college, even college baseball teams or high school baseball teams, and pick out the superstars. The one interesting thing, and I wish I could remember where I saw this study, and it may not even be a valid study, but I do remember seeing something many years ago where they tried to correlate business success with various variables. And they took grades in school and whether they got MBAs and all that sort of thing. And they found that the best correlation was with the age at which they started their own business first. The people that got very interested in starting lemonade stands or whatever tended to have better that tended to correlate better with business success than other variables. We have found ourselves, we've got a lot of MBAs running businesses for us, but they ran them for a long time before we hired them or before we made the deal. And we've got others that never set foot in a business school. And I do think there's a lot to wiring. I think there's also a lot to working with the wiring you have and developing it over time. I don't think it's all innate, and I don't think you can't improve. I know you can improve on what you're given at birth, but I do think an awful lot of it's wiring, more so than I would have thought 30 or 40 years ago. And I've certainly seen it in business. There are people, no formal business training. Charlie never went to business school. But he thought about it. I've never heard Charlie say anything dumb about business yet, except when he disagrees with me. The truth is I've never heard him say anything dumb about business, period. And there are other people. I've never heard Tony Nicely say anything dumb about business, ever. They're wired so that it doesn't flicker. They get the answers. It doesn't mean they can, they'd be a great ballroom dancer or a great baseball player or, a great politician, but they are wired for business. Charlie?
Yeah, part of it's intelligence and part of it is temperament. I don't know if Bill Genn is in the audience, but by the time I was 14 years of age, I knew Bill Genn would be rich. He was a classmate of mine in high school. He was a very intelligent man, and he wanted to be rich. And he was sensible in the way he handled life. I think sensible people with the right temperament and the right intelligence, if they live long enough in our system, will get rich. But temperament is, I think, to some extent inherited too, don't you?
Yeah. His daughter, incidentally, is a partner with my daughter in a knit shop, which I hope you patronize while you're... We've united again, and the Buffett family. Charlie, when did you first think business was something of interest to you?
Very early. I loved games of chance, and I loved trying to learn how to win at them.
Yeah, it's interesting for me, simply to think about the question of whether the Final Four of the NCAA will be canceled as opposed to postponed or transferred in locale, and to decide if we're going to pay out $75 million the next day, if it is canceled, then how much we want to receive in today to take care of that. And that probably wouldn't interest all kinds of people. That wouldn't be interesting to. And since my dad wouldn't let me become a bookmaker, I went into investments. We've got 180,000 people out there, and I'll guarantee you something is going wrong someplace as we talk. That's just the nature of it. But what you hope is that it's relatively unimportant, or that we catch it. But that's, that is something that we know will happen. We try to have a culture that minimizes that, and I think we do have a culture that minimizes that. It's very important in our view to have the right incentives, and many places we think have incentives that aren't so good. I mean, when I get on an airplane and we own the company like NetJets, the last thing in the world I want to tell the pilot is that I'm running late and I hope we can get to New York a little faster. I mean, that is dumb to incent a pilot who may be worried that, somehow you affect his job or something, to get in a hurry about the takeoff or the checklist or whatever it may be. And companies do that time after time in their compensation plans or things, that they incent people, in our view at least, to some of the wrong things. That doesn't mean nothing wrong will happen under any circumstances, but you should not have a system that causes people to, for example, worry about quarterly earnings. None of our managers do not submit budgets into Almo. I have no idea what we're going to earn next quarter, and I have no implicit body language out there or anything of the sort to our managers that I'm hoping to earn X dollars per share in the quarter. Because in the insurance business particularly, you can report any numbers basically that you want to if you write long tail business for a short period of time. And we've got 45 billion of loss reserves. Well, who knows whether the right figure is 45 billion or 46 or 44. And if the desire is to report some given number in a given quarter, instead of saying 45 billion, you say 44.75 billion or something of the sort. So we have no incentives in terms of how people are paid, or in terms of the fact they just don't want to let me down. Let's assume at the start of the year I asked everybody to submit budgets, and then I went out in Wall Street and preached a bunch of numbers. Even if their compensation didn't depend on it, the managers would feel, we don't want to let Warren down on this, so we'll take an optimistic view of reserves. And that's easy to do at the end of the quarter, and we won't let him down, and then he won't look like a jerk in front of Wall Street. So we try to avoid that sort of thing. But even then, that is what we worry about. We don't worry about this place making money. I mean, we'll make money, and if we don't, it's my fault. And that's not the problem. The problem right now, in addition to the one we just talked about, the problem is deploying capital, and that's my job too. And I haven't done a very good job of that recently, but with a little luck, we will, in a different kind of market situation, we will get a chance to do that. Charlie?
Yeah, well, if you stop to think about it, the history of much of which we don't like in modern corporate capitalism comes from an unreasonable expectation communicated from headquarters that earnings have to go up with no volatility and great regularity, corporate earnings, I mean. That kind of an expectation from headquarters is not just the kissing cousin of evil, it's the blood brother of evil. And we just don't need that blood brother in our headquarters.
Businesses do not meet expectations quarter after quarter and year after year. It just isn't in the nature of running businesses. And in our view, people that predict precisely what the future will be are either kidding investors, or they're kidding themselves, or they're kidding both. And Charlie and I have been around cultures, sometimes on the board, where the ego of the CEO became very involved in meeting predictions which were impossible really over time. And everybody in the organization knew, because they were very public about it, what these predictions were, and they knew that their CEO was going to look bad if they weren't met. And that can lead to a lot of bad things. You get enough bad things anyway. I mean, but setting up a system that either exerts financial or psychological pressure on the people around you to do things that they probably really don't even want to do in order to avoid disappointing you. I mean, I just think that it's a terrible mistake, and we'll try to avoid it.